Today, Bitcoin slides to the $118,000 level after hitting a new high last night, and Ric Edelman with the Digital Asset Council of Financial Professionals weighs in on what drove Bitcoin to that new record. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices and stocks slipping this morning after a new inflation report showed that wholesale costs rose more than expected last month. This after Bitcoin reached a new all-time high late yesterday, above $124,000, surpassing its July record above $123,000. As of noon Eastern, Bitcoin was trading at $118,300. Ether slid nearly 1% after rising to nearly $4,800 overnight, inching closer to its 2021 record of $4,866. And Solana Sol token fell more than 1%. Now, the initial gains were sparked by Tuesday's cooler-than-expected July inflation report, which raised investor optimism for rate cuts from the Fed at the end of its September policy meeting. Bitcoin and Ether rallied with the stock market for 2 days, with the S&P 500 and NASDAQ scaling new records yesterday. Taking a look at some crypto-related stocks, as of noon, crypto exchange Bullish climbed on its second day of trading on the New York Stock Exchange. Yesterday, shares of Bullish soared in the company's NYSE debut. The stock opened at $90 yesterday, 143% above its IPO price of $37. Also, shares of Coinbase dipped more than 1.5% after it was revealed that one of the exchange's wallets was compromised. The company's chief security officer wrote on X that it was an isolated issue due to a change Coinbase made with one of its corporate DEX wallets, which led to unauthorized transfers. He added that no customer funds were impacted. All right, sticking with markets for our main story. I spoke with Ric Edelman, founder of the Digital Asset Council of Financial Professionals, about what factors helped drive Bitcoin to a new record and why we're seeing a pullback now. Bitcoin hit a new all-time high late yesterday, above $124,000, but then took a hit this morning following July's hotter-than-expected wholesale inflation data. I want to start off with your take on what helped Bitcoin reach that new record and whether you anticipate more new records for the cryptocurrency in the near term, or if the pullback we saw this morning will stick around for a while.
Well, I'm not at all surprised, Talia, to see the pullback, and it's natural profit taking. We see that every time the markets hit an all-time high. People who have invested at lower prices are grabbing the opportunity to capture their profits. So that's not at all a surprise. It'll be short-lasted, short-lived, and the game will continue. And I do expect that Bitcoin will continue to rise to ever more all-time highs. I think that it'll end the year over 150,000. I think it'll be 500,000 by the end of the decade. But it won't be a straight line. It'll be more of hills and valleys, as is the typical approach for any new emerging asset class, and certainly germane for Bitcoin's history. So I'm very bullish about it, but it's going to be a jagged road rather than a straight line.
Ether also almost reached a new high before taking a hit after July's wholesale inflation data was released. The cryptocurrency has been inching closer to its 2021 record of more than $4,800. What are some of the factors driving Ether's price right now, and how high do you think it can go, say, by year end?
I think it will continue to grow, and I think it'll post gains very similar to that of Bitcoin. It's a different set of drivers, though, for Ethereum, and I think the big enthusiasm of late has been stablecoins. There's been a lot of excitement about the Genius Act, the stablecoin legislation, the very first law passed in the crypto space. The Biden administration refused to do anything like it, and the Trump administration has been working very heavily with Congress to get crypto rules into place. And the very first rule they created, the law, was for stablecoins. What most people were ignoring for the first effort in this was that most stablecoins are operating on the Ethereum blockchain. Meaning what's good for Ethereum, or rather what's good for stablecoins, is good for Ethereum. And now people are beginning to realize the incredible amount of usage and activity on the Ethereum blockchain, not at all least which due to the stablecoin activity. So since the stablecoins are going to continue to grow, I'm expecting an 8x increase over the next several years of stablecoin ownership of US currency. That is a very bullish signal for Ethereum.
Absolutely. And sticking with regulatory advancements for crypto in the U.S., last month, the first piece of crypto legislation, as you mentioned, the Genius Act stablecoin bill, was signed into law. You recently released a new education module on what you need to know about the Genius Act. Some of what you cover include what exactly is in the bill and the pros and cons tied to stablecoins. What do you think will change now that there is a federal framework for stablecoins here in the US?
You're going to see engagement by the nation's banks, credit card companies, insurance companies. You're going to see much of the Fortune 500 getting engaged in stablecoin activity. Walmart and Amazon have already announced that they're going to launch their own stablecoins. In other words, the thing that has held everybody back for the past decade has been a lack of clarity, regulatory and legislative clarity. Nobody knew if they were allowed to engage, and if so, how. Well, the law has clarified all of that and given everybody the rules of the road, and everybody's been revving up their engines, and they're now getting ready to race on that highway. So you're going to see all these companies working very quickly to get a first mover advantage, and you're going to see over the next 12 to 24 months major entrance into the field, which is a big reason why the stablecoin marketplace is going to skyrocket.
And what do you think is the Genius Act's effect on the US dollar?
It's wonderful. And this is a big reason that the Fed and the Treasury Department, even the Justice Department and Defense Department are really excited about this, because we all know that the US dollar is the currency of choice on the global economic stage. And it's really important to us that it stays that way. But we've got competition from other currencies around the world, most notably China. And up until the war in Ukraine, Russia's currency as well. So we need to keep our currency dominant, making sure that it is the currency of choice used in commerce on a global scale. Well, if you think about it, when somebody buys a stable coin, they take their dollar and convert it to a stable coin. The stable coin goes and buys a US Treasury or US dollars. Now, for an American, you would say, so what? That's much ado about nothing. I already have a dollar. If I put it into a stable coin that buys a dollar, I'm back where I started. And you're right. For an American, it doesn't really make a whole lot of difference. But if you're not an American, if you live in Zimbabwe, Argentina, Venezuela, you live in a nation where there is an unstable economy or a corrupt government, or massive inflation, you want to have your money in a stable environment to protect yourself from confiscation or erosion due to inflation. That means somebody living in Zimbabwe would love to turn their money into a stable coin and have it backed by the US dollar. That strengthens the dollar, and it'll help to lower our interest rates at the same time. This is wonderful news for the American economy, the US dollar, and federal fiscal policy.
Now, last month, the House also passed the Clarity Act, which pretty much lays out the rules of the road for crypto. It seeks to define the roles of the SEC and the CFTC in overseeing digital assets. The bill now moves on to the Senate. What do you think happens there? And if that bill becomes law, what do you think will change for the crypto industry? What do you expect to see?
Yeah, we do believe the bill will be passed within the next 60 days. And this is further clarification. The Genius Act gave us clarity on stablecoins. This new bill will give us clarity on much more within the general world of crypto, and again provides the rules that the traditional finance industry, banks, insurance companies, credit card companies, as well as the Fortune 500 generally, need to know that they're able to engage in this marketplace. They know what they're allowed to do, how they're allowed to do it, how they have to disclose it and report it and pay taxes on it. And this is going to unleash the burdens that have kept everybody out of the marketplace. The result of all this, you're going to see hundreds of millions, probably hundreds of billions of dollars, perhaps even trillions of dollars flowing into Bitcoin and other digital assets. And since all of these coins operate on a supply-demand issue, just like any other asset, we're anticipating this is going to be the beginning of a major source of inflows and price increases over the next several years.
Now, last time we spoke was back in June when you sat down with us here in studio to explain why you're calling for financial advisors to allocate up to 40% to crypto in portfolios. Your new position represents a dramatic shift because you used to say that investors should allocate low single digits to crypto. So what has been the reaction to your new stance on crypto allocations?
When I wrote my book, The Truth About Crypto, which won a Best of Business Book Award, was debuted at #1 on Amazon, that was back in 2021. And back then, we didn't really know what the future of Bitcoin was going to be. Was the government going to ban it? Might it become technologically obsolete? Would investors not care? And so it was a big, bold, speculative bet to buy Bitcoin 4 years ago. You fast forward to today, and the fact pattern has totally changed. We now have an administration that is strongly behind Bitcoin. Donald Trump has made it clear he wants the U.S. to be the crypto capital of the world. We now have legislation and regulation that are favorable to the adoption and usage of digital assets in the marketplace. We have, as a result, institutional engagement that we've never had before. And for all of these reasons, it's now safe to get in the water. You no longer have to speculate, might this disappear tomorrow? That isn't going to happen. And we can say that with a high degree of confidence. We couldn't do that 5 years ago. So for those reasons, it makes much more sense when you look at the fact that we are very in the early innings of the development and deployment of this technology, that the profit potential is huge, far outpacing those of any other asset class. And that is why even conservative investors should have a 10% allocation, moderate 25%, and if you're an aggressive long-term investor, 40% of your portfolio.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.